Before you write an offer in Los Gatos, Saratoga, or the Almaden Foothills, pull up one state map. California redrew its fire hazard maps for the first time since 2011, and the state's insurer of the last resort filed for an average of 35.8% rate increase aimed at renewals after April 1st of this year. I'm Michael Rolfs with Coldwell Banker, and I help buyers and sellers every single day here in Silicon Valley. Here's how most buyers treat insurance. It is a checkbox you handle after your offer gets accepted. A few $100 a month, whatever it comes out to, you deal with it in escrow. In the hills, that read is now wrong. Insurance belongs inside the offer itself. It can actually swing your monthly costs the way a rate change does, and it varies house to house, even on the same street. Two things made that true. The state put out a new hazard map that for the first time classified neighborhoods inside city limits into 3 tiers. In the fair plan, the insurer of last resort, that nearly 600,000 California properties now depend on, filed for that big average increase. So here's the plan, the map and how to read it in 60 seconds. Why the quote belongs inside your offer, what the fair plan actually is without the panic, and the one lever you control. And the 3 checks I would run before writing anything up next to a hill in this county. In February of 2025, the state fire marshal released an updated fire hazard severity zone maps for what are called local responsibility areas. That is the land inside cities and towns. And for the first time, state law required all 3 hazard tiers to be mapped there: moderate, high, very high. Before this update, city areas only had to show the very high zones. So a lot of hillside streets are carrying a written designation they've never had before. Santa Clara County jurisdictions all got new maps. Los Gatos adopted its map in the summer of 2025. The hills above Saratoga, the Almaden Foothills, the streets backing up to the open space, this is exactly the terrain these maps were drawn for. Here's the part that takes about 60 seconds. The state fire marshal runs a public viewer online. You type in your address, it shows you the zone. Do it for every single hillside home on your list before you tour, not after you fall in love with the home. And understand what the map measures, because people get this wrong all the time. It measures hazard, not risk. Hazard is a long-term probability of fire conditions on that ground based on fuel, slope, and weather over decades. It does not account for anything the owner did to harden the home, which means the map is the starting line for your insurance conversation. It is not the final word. One more reason the designation matters beyond the premium: the zones plug into real rules. Higher tiers carry stronger building codes and defensible space requirements, and the zone shows up in the seller's natural hazard disclosure when the home sells. So this is not just an insurance map. It follows the property through ownership and through the next sale. And once you know the zone, the next step is almost the one that nobody does in time. The insurance quote is no longer an escrow detail. It belongs inside your offer math, and here's why. Premiums in the hills now vary dramatically from one house to the next. The zone matters, so does the slope, the brush around the structure, the roof, even the access road. 2 homes at the same list price can carry very different monthly insurance numbers, and you will not know which one you're buying until someone actually gives you a quote. So get a real quote before your inspection window, or even before you write an offer on a home if you're going non-contingent. Not a ballpark from a friend, not last year's number from the seller, a bindable quote on that address with the coverage your lender will require. Your lender is going to require the policy either way, so the only question is whether you learn the number while you still can negotiate or after you cannot. Say you're comparing 2 homes at the same price. One sits in the flat area and one sits up on the hill with a view. If the home on the hill costs several $100s more per month to insure, That hits your budget the same way a meaningful rate move on your loan does. It changes what you qualify for and what the house truly costs you every single month. This is just the due diligence you have to do before you write an offer now. The roof, the foundation, sewer lateral, insurance. In the hills, it belongs on that list, the same tier as importance and the same sort of deadline. Now, the two words that scare people in this conversation: fair plan. Here's what it is, minus the panic. The fair plan is California's insurer of last resort. It is not a government program. It is a pool funded for by private insurance companies built for homes that cannot get a standard policy. Statewide, it has grown to nearly 600,000 policies because as regular carriers have pulled back from high hazard areas, more homes had nowhere else to go. Two things to know if a home on your list can only get fair plan coverage. First, the coverage is basic. It centers on fire. Many owners pair it with a second policy to cover what it leaves out, which means you are budgeting for 2 premiums, not 1. Second, the trajectory. The fair plan filed for an average of 35.8% increase statewide, aimed at renewals after April 1st of 2026. That is an average. Individual properties can come in above or below it depending on the specific hazard area. So if the house you love is a fair plan house, that is not an automatic no. It is a different total cost of ownership. Budget today's premium plus the second policy plus the direction the number is moving. Price it like what it is. And one more thing worth knowing, the state passed a new package of laws in late 2025 aimed at stabilizing the fair plan after the LA fires stressed it badly. The system is being worked on, but worked on is not the same as cheap, and your budget should respect the difference. Here's the good news buried in all of this. There is one variable you can actually control, and the system literally pays you to use it. You cannot move the map. You can change the house. Insurers in California are required to offer discounts for wildfire safety work, and the fair plan runs its own program called Safer from Wildfires, with discounts on the wildfire portion of the premium for hardening the property. Hardening means the unglamorous stuff, defensible space cleared around the structure, ember resistant vents, the roof class, the zone around the house kept lean and clean. None of it photographs well. All of it shows up in the quote. If you are buying, ask the seller for documentation of any hardening work that has been done. Receipts, inspection reports, anything on paper. If it exists, it goes straight into your insurance application. If it does not exist, you just learn something about your first year of ownership costs. That documentation is now a marketing asset. Put the hardening paperwork in your disclosure package right next to the roof report. The buyer's insurance quote is part of whether your deal closes, and you can influence it before you ever even list your house. 3 checks before you write an offer on any home next to the hills. Check 1, the zone. State viewer, 60 seconds, every address on your list before you even tour. If 2 finalists sit in different tiers, you want to know that while you can still compare, not after you've committed your heart to one of them. Check 2, a bindable quote inside your home inspection window or before you write an offer on that address with your real coverage. If the home is fair plan, quote both policies, the fair plan and the companion coverage, so you see the whole number. Check 3, the total monthly figure, principal, interest, taxes, insurance. And if the home sits in a higher tier or on the fair plan, the trajectory of that premium, not just the first year. Sellers in these zones must disclose natural hazards, so the information exists. Read it and use it. And here's my honest bottom line, because I'm not here to talk you out of buying a home in the hills. Hillside living in Los Gatos, Saratoga, and Almaden is some of the best in the county, if not the country. The trails out the back gate, the views, the quiet, none of that's changed. What's changed is that the whole number got bigger and more variable And the buyers who went up there now are the ones who know the whole number before they write. Buy the view with your eyes wide open. So to recap, the state redrew the fire maps for the first time since 2011. In the city, neighborhoods now carry 3 hazard tiers. Check online before you even tour. Get a bindable quote inside your contingency window because the premium swings house to house. Know what the fair plan is and budget its trajectory, not today's number. Hardening earns real discounts and the paperwork is an asset whether you're buying or selling. And run the 3 checks before any offer on a home in the hills. Zone, quote, total monthly. You came in thinking insurance was an escrow checkbox. You're leaving with where it belongs, inside your offer. I help people navigate these areas every single day, helping buyers and sellers both. So if you're thinking about selling or if you're thinking about buying, I'd love to be a resource and help you through that decision. All my information's in the description below. If you're curious what your home's worth and if this has affected your area, please send me a text. My number is right here on the screen. Happy to answer any questions. See you guys in the next video.